Okay, let's go back here. Can everyone see my screen?
Yes,
Yeah.
ma'am.
Okay.
Yes, ma'am.
All right. So today, we're going to be going over, the journey of the home buyer. My name is Lucretia Cato. I'll tell you a little bit about myself. I became a real estate agent in 2017, mainly because I wanted to, own my own business, of course. I wanted to help families become first-time home buyers, especially those people who believe that they could never own a home. So people are my passion. I love to educate people on the home buying process and make home ownership possible. This is our team. I do appreciate everyone that is on board with presenting today. I do have everyone's information on the nearly the last page. So if anyone wants to reach out to any of our professionals, you'll be able to do that. So today we're going to be discussing the home buyer's journey. We're going to talk about how to get pre-approved, financial awareness. We're also going to go over the purchase contract. For Ohio and Kentucky, there are similarities, but the major similarities, they're about the purchase contract we're going to go over. We're also going to talk about why you should get a home inspection and why you should have a home warranty. Now, 78% of people want to own their own home, but 70% are currently renting their home. So today, hopefully, we're going to go over why this is, why 70% of people are renting versus buying their home, and a lot of the concerns behind it. Now, a lot of people don't know where to begin. So thank you so much for watching this video, attending this seminar, because that is the first step in becoming a homeowner. Another concerns that people have might be, they don't feel like they can afford putting 20% down. They can't afford a mortgage. Maybe their credit score is too low. They even think that owning a home is just too much work. They can't afford the repairs, and a long list of other concerns. And finally, a lot of people just aren't aware of home ownership. No one in their family ever owned a home. They don't know it's possible. They don't know the steps. They don't know who to talk to. So this is why we're here. As your agent, I'm going to educate you as well as everyone on this panel. We're going to give you all the information, all the tools in becoming a homeowner. So you might ask why? Why buy now, right? Well, um, interest rates. Interest rates are climbing every single day. So the interest rate today may not be the interest rate tomorrow, 2 days from now, next week. So those interest rates are always climbing. A year ago, they were at their lowest, but if you waited, you missed out on that. No worries. You can still buy a home with a relatively lower interest rate, but you have to act fast because yesterday's prices are not today's prices. In the increase in rent, if you are renting right now, more than likely you have probably had a increase in your rent over the past year or two. In Cincinnati, 43% of renters are spending 30% or more of their monthly income on rent. That is outrageous. You are spending your money on something that you are not owning. You are making your landlord wealthy. More than likely, where you are renting, the mortgage is already paid. You might be even paying for their second rental or third rental or their vacation home. So owning it gives you power. It gives you a sense of security. Owning a home, it builds equity. Over the time that you own your home, it increases in value. When you take properly care of your home, every single year, you will be able to see the value of your home increase. and it helps with building generational wealth. You will be able to pass this home on to your children and your children's children. I can't stress you how important home ownership is. Allow your children, your grandchildren, even if you don't have children, nieces and nephews, sisters and brothers, you can pass this home properties on to family members, keep it in the family, and increases in equity, and you build wealth that way. And why wait? This is a perfect time to buy a home right now. Everyone's buying. There's so many corporations and big name companies buying homes. Why? Because they see the value in that. They buy these homes and then they rent it back to you at even higher rates. So take that chance, talk to an agent, talk to me, talk to a lender, and we can get you on a path of buying a home and building that wealth. So this is a great diaphragm or graph to show what you're paying in rent. Let's just say the average rent I would think is maybe $900. In a year, you're going to be paying over $10,800. And if you go all the way over 15 years, that leads you over $160,000 that you're going to be paying. Just think that that money could have been in a home. You could have literally paid this amount of money and owned your home in 15 years. So just understand that when you rent, you are paying your landlord's mortgage if they even have a mortgage. So home ownership is powerful. Your landlord knows this. Anyone who owns a home knows how valuable it is. So it brings me to this quote: home ownership is the cornerstone of a strong community. When buy a home, let's say you buy a home and then, let's say your sister wants to buy a home. She buys a home, and then maybe your brother or your aunt, all of you come together, buy a home on the same street. You build a strong community for your family, for something that you can leave to the next generation and generation after that. So just understand how important home ownership is. So now we're going to talk about the buyer's journey and why you need a real estate agent. Real estate agents, people think this is a glamorous job. And sometimes it is, maybe on closing day. But there's so much that we do, and we love every second of it. But this is your journey as a buyer. So first you meet with the agent, right? You and I, interview agents. It's completely fine. Not, all agents are, great agents, sad to say, but you meet with an agent, and from there, we are considered your resource hub. We will connect you with a lender like Danielle, who will go over what you need to submit to be pre-approved, pre-qualified. And from there, once you get pre-approved, that's when we're going to start looking at homes. And not all the homes that we're going to view are going to be of your liking. And we're going to go over the wants and needs in this presentation as well. So but after we find that home that you absolutely love and you want to make an offer on it, we're going to write up the contract for you. We're going to negotiate for you. We're going to look out for your best interest, and we're going to make sure that you're not paying too much for the home. We're going to make sure that everything that you can possibly need to close, it's going to be done. We're also going to handle the any counter offers that may come from the seller. We are going to set you up with a home inspector, and they're going to walk that property, hopefully with you, that you're going to attend the home inspection. And from there, if everything works out, we are going to let you give you information on what home warranty that you can use for protecting the inside of your home. And finally, after all of that, we're going to schedule the closing with the title company, and we're going to hand you your keys. So I know I condensed that a lot, But that is the short end of it. We are going to hold your hand through this entire process. There's never going to be a time where you don't know what's going on. You will know every single thing that's going to happen from start to finish. So this is why you need an agent. I would never advise any buyer, seller to try to buy or sell a home on their own. There's so much that can slip through the cracks. There's so much that you can overlook. And by the time you close on that home, you're going to feel like you did not make a good decision. And we don't want that. We're going to weigh all the pros and cons, and we're going to present you with all the information that you can possibly need to make sure you don't have buyer's remorse, and make sure that you feel very secure in the decision when we close on this home. All right, now we're going to hear from Kwan-yin Nixon. She is our financial advisor with Primerica. And Kwan-yin, I'm going to hand it over to you.
Okay, thank you so much. That was good
Absolutely.
information to have for sure. I'm going to share my screen here. Uh, one of the press the wrong button. Okay, there we go.
Okay.
So I am a financial representative. I am licensed in 14 states. I love teaching people how money really works so that they can improve the relationship that they have with money or create one. Uh, Money is a resource, it is a vehicle, and once you learn how to use it appropriately, the the generational wealth that can be created, the headaches that can be avoided, is amazing. Can you see my slide?
We can.
Okay, awesome. So how money really works. So this is what I'm going to be talking about today. Now, some things people don't realize that they can do is actually get out of debt. They think that if they're going to be in debt, I apologize, for the rest of their life. And it's just not the case. You can get out of debt, you can build savings, you can get on the path to financial independence. Now, the first thing you want to do is you want to take control of your money. Now, did you know that one of the biggest financial mistakes most people make is dependence? Okay, dependence on others, allow outside factors in people's lives to control them. Now, the secret to financial security is learning how to control the things that you actually can control. Now, these are the things that you can take control of: paying yourself first, adjusting your priorities, changing your thinking. It all begins in the mind, okay? Adjusting your lifestyle, adding additional income, avoiding the credit trap, and then setting goals and having a clear plan. Now, what you can't control: the future of Social Security, okay? Your employer, taxes, inflation, the rising costs, the risk of a single investment. Now, what you can control: saving for retirement, other sources of income, ways to reduce your taxes, ways to maximize your savings, saving more, and diversifying your investments. Now, I want everyone to pay themselves first. See, the problem at the end of the month is that most people don't have anything left to save. So make yourself that priority. The first of the month, before you pay anything else, write yourself a check for 10% of your income. Now, paying yourself first may be the single most important concept in my presentation. Now, I want you guys to see this. How much should you have saved? Now, you want to take your average income, okay, and put it in the number of years you have worked. You want to multiply those numbers, and then you get an estimate, okay? Then take the amount that's currently in your personal savings now or your investments, and then divide the two. That will show you how much you have saved. Now, depending on how much it is, they might put a smile on your face, they might put a frown on your face. If there's a frown, come see me. If there's a smile, come see me because I can make that smile bigger. Okay. Now, there are three accounts that everyone should have: an emergency fund, a short term savings, and a long term savings. Now, the emergency fund, I like to call that Murphy's Law because anything that can happen will happen. The expectation that you're going to be going in and out of that at any given time. You should at least have about 3 to 6 months of your expenses going in, especially if you are living paycheck to paycheck. Okay. Now, the short term savings, that is for things like putting a down payment on a house. You're going to be taking a vacation. And you want to pay cash for it, a college savings, things of that nature. And then the long term, that's retirement money. And you can have that in several vehicles. The expectation is that you're not going to be touching that until you're ready to retire. All right. Now, if you're going in and out of those first two, you never have to touch that third one, and because it's your safety net. Now, use time and consistency. Now, someone once said that the only two things in life you have are the opportunity and time. Time combined with two other important elements, rate of return and consistency, is a powerful key to achieve financial security. Now, it starts with investing early. Now, suppose your parents had deposited $1,000 on the day you were born. If you left that account alone untouched until you turn 67, you would have almost a half a million dollars. You'd have over 400,000. And that's just with a one-time investment. That is the power of compounding interest. Now, the sooner you begin, the more you have. Now, let's talk about the cost of waiting. Now, in this scenario, someone who just waited 1 year, then they could have invested at age 25, but they said, you know what? I want to go on vacation this year. I don't want to do it. So they just waited 1 year. 1 year cost them $49,000. I don't think they spent $49,000 on a vacation, right? But it cost them $49,000 in the long run. And then look what just waiting another 4 years cost them. Another 4 years between age 26 to 30 cost them $200,000. $200,000. That is so powerful. And just a 5 year, just between 25 to 40, let's just say they just said, no, I'm going to just wait. That cost them almost a half a million dollars in investing power. That is so powerful. Now, the rule of 72. To me, this is a sexy rule when it's working for you. Okay, it's the devil when it's not. Now, the rule of 72, take the number 72, you divide it by your interest rate, and it's going to tell you how long it takes $1 to turn into two. Okay, so I'm going to play a little scenario with you. You have triplets, okay, boys. They're all age 20. We got Matthew, John, and Luke, okay? They all three get $10,000 from their favorite uncle. Uncle's like, look, I'm going to give you this. What you do with it, it's up to you, but this is what you have. This is the power, okay? So Matthew was like, I'm going to put this in my savings account. It's going to give me 3%. I'm excited about, okay? Mark was like, I'm going to do CDs. I don't think I'm trusting the bank. And then Luke is like, no, I'm going to do it in investments. I'm going to do it in mutual funds. Now check the difference. Now with Matthew, $10,000 at age 20. Now the rule of 72, 72 divided by 3, it took 24 years for his money to double. So by the time he's 44, he has 20,000. By the time he's 68, he has 40,000. And I promise you, he can't wait another 24 years, right? Now, Mark is laughing because he was like, I did it in that 6%. Now when I get old, I got $160,000. Matthew's a little bit jealous, but who really won? Look at Luke. Luke was like, hey, I talked to this girl named Kwan-yin, and she told me to put it in mutual funds, and this is what I got. Same amount of time, same money. But that interest rate made the difference. He has $2.5 million saved, same amount of time. That is the power of compound interest. And that is why the vehicle is so important. See, right now, bank savings is a fraction of a percent. CDs are now at 3%. Now, no one can guarantee you 12%, but the average interest rate, even with everything that's gone on in the last 60 years, has been 10%. Now, paying off your debt, you want to do that because that is the cancer of investing. Okay. If your money is going towards paying out debt, then you're not able to build your wealth. Now, check out this credit card. Remember the same rule of 72. If you bought one purchase that was $3,000 with an interest rate of 18%, which is rare, look how much that $3,000 cost you. It ended up costing you $5,000. That is big. Imagine that same $2,000 you put if you were to put it in investments. Now, revolving debt and fixed debt. Revolving debt is credit cards, okay? Because if you haven't paid it off, then you're paying on the principal and interest, and then the interest on top of that interest, versus a fixed debt where you know the period of time that's going to be paid off. That is powerful, and that is also your investing. That's your time and your money that you could be investing in. Now, good way to get rid of that is what we call debt stacking. Some people know it as the snowball. So what we do is that, there we go. So when we do our financial needs analysis, what we do is we put it in order according to the interest rate and some other factors. You pay off that first credit card in this scenario. Don't go below that 220 once you paid off that credit card. You want to put it on the next card. And now instead of that 353, someone is paying 572. Now that's almost twice as much. So that credit card is going to be paid off faster. Now, once those two cards are paid off, now you're putting over $1,000 on your car loan. So that's double payments, right? Now, once that car is paid off and you're super duper happy, go on and knock out that third credit card that you have. And then imagine all that money going towards your mortgage. Now, check this out. It is the same amount of money, but because you were able to streamline it and give it a better plan, you're able to pay off your debts so much faster. Now, with that scenario, had they been continuing the same way they were going, it would have took them 23 years to pay off that debt. So we were able to get them paid off completely debt-free in 9 years versus that 23 years. And look at that interest that they avoided, over 130,000. That's purchasing power. Now, a lot of people don't know, which is why I'm going to touch on it, is that life insurance is a form of financial, it's part of the financial industry because it is income protecting. You're protecting the income of the people who are left behind because the person that passed away was contributing to the home. Now, the importance of insurance, a lot of people, I ask this, how much is your car worth and do you insure it? And they're like, of course I do. And what about your house? Well, absolutely I insure my house. Okay, but how much is your wife worth to you? How much is your life worth to you? I promise you your life is worth more than the car and the house because those can be replaced, okay? So you cannot not have life insurance. It's so important. Now we have what is called a theory of decreasing responsibility. Now what that is that we want to protect people if they don't live long enough, and then we want to protect them if they make it to retirement. See, when you're younger, you have responsibilities, family, debt, house, but you have little money, right? As you go through the years, the children are grown up and gone, you know, your debts are paid off, and now you're in retirement. Now you need to have the money. So that is your major concern as you get older. So what we do is we protect in the event that someone does not live to retirement. And then on the other side of that, we help them to make sure that they can live out their best days. Now, these are some of the things that experts say, and I completely agree with them. Term life is pure protection. Like fire insurance or auto insurance, its sole function is to support your family if you die. You can buy large amounts of coverage for modest amounts of money. And big policies are what your spouse and children need. You always want to keep your life insurance, and your investments, your investments. You never want to commingle those, okay? It is not in your best interest. Now, our philosophy, the three nevers. Never buy any kind of cash value or whole life insurance, including universal life. You can reach out to me if you have questions about that. Never buy insurance as an investment. It is not an investment. Okay, they don't even need an investment license to offer it to you. And never buy life insurance policy that pays dividends. It is not a dividend, it is an overpayment. You're supposed to have that money anyway. Now, investing with a professional. You do not want to invest your money with somebody who is excited on TikTok. You want them to have professional training, okay? Mutual funds are a great way to become an owner, not a loaner. They give the average person the opportunity to invest in the economy with professional management, okay? There's always risk, but after all, you're buying a little piece of the economy, and the economy is influenced by many factors, okay? Now, what is a mutual fund? So a mutual fund is a pool of money in different companies, okay? They keep the investments under control and under constant supervision. The money managers use their knowledge of securities, okay, and changing market conditions to invest the pool assets in many different companies within a variety of industries, okay? So whether if that's tech, if it's pharmaceutical, real estate, things of those nature. Now, what do you think earn more money? So we have two scenarios, and I'm going to touch on it briefly. So investor A did with the rising market, and investor B did with the fluctuating market. Now, the difference between the two is when the market is down, investor B can actually invest more money because it's like having Wall Street on sale. So as the stock market goes down, investors get excited because they know that their clients are having an opportunity to invest more of their money. And then when it goes back up, they reap those benefits. As you can see, the difference between investor A and investor B, investor A only did it when it was when the rate of return, when the market was just steady. At the end, they only ended up with 42 shares versus investor B, who did it with a fluctuating market. When the market was down, he still invested. When the market was up, he still invested. And he has 126 shares. That is a big difference. Now, the 3Ds of investing. Okay, you got dollar cost averaging, discipline, and diversification. Those three are very important. Now, guys, you can do this. The path of financial success, it starts with understanding those few basic concepts and implementing them. To turn it back over to Lucretia. You're muted.
Well, hello.
There we
There you
go.
are.
Now we're gonna go to Danielle Prost with Prost Mortgage. So I'm gonna go ahead and stop sharing.
So many technical things. Can you
Yeah.
hear me? All right,
Yes, we
good.
can.
Okay,
Yes,
so
ma'am.
I'm going to share my screen and start my slideshow. Okay, so just checking. So now I can't see what which screen do you see? one that just shows the slides, or do you see the?
Mm-hmm. The
Home buying
slide.
seminar.
Okay, the whole screen's the right slide.
Yep.
Okay, because I also see a screen of like the background of it. Anyway, so good morning. I'm Danielle Prost with Prost Mortgage Group. I am a branch manager of a mortgage company located in Cold Spring. I'm super happy to have the opportunity to talk with you today and tell you about the home buying process and how we can help you get into your home. So, just to give you a little bit of background of who we are mortgage advocates who believe that every borrower has the right to our time as professionals in the industry, the right to receive qualified advice, and the right to tell their story. And it is a huge backbone of what we do, how we interact with our borrowers and our referral partners, is that whether or not somebody has a 300 credit score or an 800 credit score, they still have the right to receive a great experience and put themselves on the path of homeownership. We are licensed in Ohio, Kentucky, Indiana, Tennessee, Florida, and Michigan. My husband and I work together. Ken is our main loan officer. We've worked together for 18 years, and he has over 25 years of experience in the industry. We do a lot of down payment assistance loans, which I'll talk about in a moment. But Ken was the number two loan officer in the state of Kentucky for the down payment assistance program that the state offers. So, just really familiar with being able to utilize some government resources to help with the down payment. So, first, let's talk about the qualifications for a home loan. So, the four C's is what they're called that are reviewed by a lender are capacity, capital, collateral, and credit. So, the capacity is the ability to repay the loan. Do you have work history? Do you have a regularly scheduled hours? Can we show that you have enough income to support the home that you're wanting to purchase? Capital is the amount of money for the down payment or reserves. The capital can be through a down payment assistance program, or it can be money that you have saved, but we have to show where that money is coming from. Collateral is the property being purchased. You can meet all of these requirements, the other three C's, but if the collateral doesn't fit the loan program, then that can be a problem. So we'll talk about that in a little bit. And credit, review of the credit report and score. So again, you have to meet all four. So if your credit isn't where it needs to be for that program, even if the collateral and the capital and the capacity are all there, that doesn't help. So, or doesn't work. So we have to meet all four of those components. And part of our job, and really the main part of our job, is to help you understand those and to get you into a loan program that you can meet all of those four C's. And for some of you who might remember when the market crashed, I'm going to go back when the market crashed in 2008 and there was a huge housing crisis in the economic part of our country. It is because lenders were only lending on one of these C's. Like, oh, well, they have the capacity to repay, so we're not going to worry about the others. Or, oh, they have the credit, but we're not going to worry about if they have the money for the down payment. We're just going to give them all the money. So that is why after that happened, these four C's kind of developed and became you have to meet these requirements because it's to really stop a housing crisis from happening in the future. Some of the obstacles we see people have about getting a home loan is their credit score isn't where it needs to be. The income isn't high enough. They have a lack of credit history, cash deposits for the down payment, customers maybe not listening to the best that they can during the process, or properties not fitting the requirements. So we educate you during the process and help you understand like, oh, if you want to do this program, you need a 680 credit score, but if your score is a 620, then we can look at this program. Oh, you're self-employed, so we're looking at tax returns because you want to do this specific program, but we're going to look at bank statement programs so then you can do something different. It's helping understand how we can fit the right program so that you don't have these obstacles. If you're doing an FHA loan and you're trying to buy a house that has a lot of peeling paint, Lucretia's going to be like, that's not going to work. So it's all of us working together to help you understand the best home, the best property, for your specific situation because everybody's different. Everybody's life experiences are different. The things that you went through are different, and we understand and respect that. So, why do you have to get pre approved? Why can't you just call up Lucretia and be like, I want to go look at a house tomorrow? And Lucretia's going to ask you, have you talked to a real lender? And they're going to be like, no, I just want to go see this house. I know I'm fine. Well, you don't want to do that because you don't want to waste your time looking at a house you can't afford because maybe that payment's $2,000 a month for that house, but you're really wanting to more pay $1,200. You might be able to get more than you anticipated. Maybe you're looking at a house that's 150,000, but you'd be comfortable at 200,000. Also, pre-approval gives you a good idea on how much a loan payment is, what's included in the payment, such as property taxes and homeowners insurance. And even if it's been a significant time, like you were not a first-time home buyer, you have purchased before, things change, tax rates change, interest rates always change, down payment requirements change. So it's good to refresh yourself before you go look at a home and also to make sure you had your finances really reviewed. What if you can't get pre-approved? You call us up, you found your dream home, you really want to go look at it tomorrow, but Lucretia's like, yeah, you need to get pre-approved. And we talk to you and you're like, oh, you're just not really in the right spot quite yet. We provide you a free written game plan to get you on track. We're going to follow up. We're going to answer questions. We send you monthly motivational videos and calls because we get it. Everybody on this call has at one point in their life been at a point where they couldn't have purchased a house right at that second, that they needed to do something for their game plan to get ready. And we're dedicated to your success. So don't worry if maybe you're like, oh, I don't think I have the credit score. Oh, my job history is a little bit different. Give us a call. Let's get you on track. Let's get a game plan and let's get you. So maybe before you sign your next lease, you're able to go and look at a home and purchase. So when you apply for a loan, you can complete your loan application usually via telephone or online. We'll ask your permission to request your credit report so that we can view that. If you're somebody who's maybe a little bit more comfortable with sitting down in person to apply for it, no worries at all. We can always set up an appointment for that. During the pre-approval, we request items from you such as pay stubs, W-2s. We ask questions about your home ownership goals. We complete our checklist with a 117-point checklist. That does not mean we ask you 117 points, but that means when we review a pay stub, we're looking at like 6 or 7 different items just on that pay stub alone. We're very diligent. We're very thorough in our pre-approval so that when you find your dream home, the underwriting process is very quick. It's very important to us that we do a lot of the work up front so that you feel very confident when you're going to look at a home that you understand the whole process and that there's not a whole lot of other paperwork that's going to be needed from you. A thorough pre-approval eliminates so many problems during underwriting. We then issue the pre-approval and send it to your realtor. A lot of people ask, well, how long does it take to get pre-approved? As quickly as you can send us pay stubs, W-2s, and bank statements, things like that, or if there's something maybe particular in your situation type documentation you would need, that's how quick it takes. So if you send it to us quickly, then we'll pre-approve you really quick. So, and sometimes let's say that you're a truck driver and you get paid per load. Well, we're going to want to do a verification of employment from your employer so that we can see a pay history so that we can make sure that you are getting the maximum amount that you want to get pre-approved on. So just being, again, really thorough eliminates a lot of heartache and problems later. These are what documents are usually needed during the loan process, but just so you can start to gather those together. Last 30 days pay stubs, most recent 2 years W-2s. Some programs require federal tax returns. We'll let you know if you would need those. Last 2 months bank statements, any other asset accounts you have, copy your driver's license. So it's always good to try to find these items. Don't worry if you can't find something. I know a million resources to help you figure out how to get it because you're not going to be the only one who's misplaced a 2021 W-2. Like we'll help you figure that out. No worries at all. So once you have a purchase contract, we've gotten you pre-approved. Lucretia's went and taken you to a bunch, few houses, and you found your perfect one. You have a purchase contract accepted. That's all amazing. We set up an appointment for you to sign your initial loan paperwork, and you can either do that online or in person. We are processing, then your loan goes to a processor. Our processing staff, who are all work out of our office, verify employment. They order appraisals, title commitments for the property. A licensed real estate appraiser in your state examines the property being financed to confirm that the value that you're purchasing the property for is supported and that there's no repair issues. During the loan process, we submit the loan to underwriting. The underwriter reviews it. They will always ask for additional items. Like it doesn't matter how well we do the pre-approval, they're always gonna be like, well, let's have an updated pay stub. Let's have one more bank statement because that one's 30 days old. So those kind of items. We work to get your loan approved and clear to close, and we work with Christion, the title company, to schedule the closing. And then at the closing, you sign your final paperwork. So that's just like really quickly, kind of nutshell of how the process works. Just to give you some program options so that you know what's available, we do offer FHA, which goes down to a 580 credit score, 3.5% down payment. It's a great program if you don't have a large amount for a down payment. We can manually underwrite the loans. So it means you can go a little bit higher with your debt ratio, and there's some exceptions to rules. It's more looking at that specific situation. Conventional requires a 620 score and 3% down if you're a first time home buyer. You have to receive an automated underwriting approval, though, and that can be a little bit tricky if you have a little bit lower credit score, like a 620. So sometimes FHA is just a better program for you. USDA, which is based on rural areas. So if you're familiar with Northern Kentucky, Alexandria is considered USDA eligible. In Hamilton County, you have to get a little bit of ways from the city before that kicks in, but it's 100% financing with a 640 minimum score. There's some really strong income limits though, so it's always good to look at that. And of course, veterans are eligible if they are eligible veterans there can get 100% financing. I'm going to go over quickly some down payment assistance programs in Ohio and Kentucky, just so that you know which options might be available for you. And just as a prerequisite for down payment assistance programs, they all have 100% finance, or they all have strict income guidelines. You can't make over a certain amount. So we can go over that with you and make sure that that's not going to be a problem before. So Kentucky Housing in the state of Kentucky offers up to $10,000 for down payment assistance. You can use this program for conventional FHA, USDA, VA. You have to have a minimum of a 620 credit score. The down payment assistance for Kentucky Housing is paid back monthly over a 10-year term at a rate of 3.5%. River City Grant Funds is a consortium of cities in Northern Kentucky, including Ludlow, Bellevue, Newport, Covington, Bromley, Dayton, and Erlanger. We don't know why Erlanger was included because it is not a river city. Funds are available in 10,000 or 15,000 depending on the area. Some areas are eligible for a limited grant of 25,000. This program does not have a repayment, so it is really wonderful. So if you're looking, maybe you're looking in Ohio and you're like, oh, I just really want to use that down payment assistance just on the other side of the river. And then Ohio has great down payment assistance programs as well. If OFA, Ohio Housing Finance Agency, you can get up to 5% down payment assistance. You can use it anywhere in Ohio. That is not repayable as long as you own the home for at least 5 years. And you do need a 660 credit score for that program. So just again, putting that out there. There's the ADDIE program in Cincinnati. It's the American Dream Down Payment Initiative. That's through the city of Cincinnati. It is a maximum down payment assistance of 14,000. Homes have to be purchased within the city limits. All of the other down payment assistance programs this doesn't apply to, but with ADDIE, you have to apply for that program before you have a purchase contract. So just want to make sure I put that out there. Home Investment Partnerships Program in Butler County. There's also a $5,000 down grant, but it's not allowed in the city of Hamilton. So just some of those out there, and there's a bunch more. There's different ones that might be available if you've been renting, if you've had subsidized housing through a Section 8 program. There are sometimes Section 8 grants. So always happy to look at different ones and work with those to get that approved. Always good to know what not to do, right? Like you want to know you want to put your best foot forward during the loan process because it can be hard and it can be overwhelming. And our job is to take all that out of there. But there's still a responsibility for the buyer not to do certain things because you're just going to make it harder on yourself. Don't change your job in the middle of getting financing. Don't change banks. Don't have new credit inquiries or like a new credit card or furniture for the home. Don't be late on any credit card payments or charge excessively on existing accounts. Don't use credit cards that currently have a zero balance. Don't make large deposits over $1,000 into your bank account without keeping track of where that money's from. You have to source all deposits. So if you deposited $1,800 we'll have to know where that came from. So it can be totally fine. Like you got a bonus at work, you got a check for it, but we just have to know. So if it's cash from a friend because you sold your living room furniture, like that's going to be difficult. So you don't want to do that. Always talk to us and we can help you through that. Don't co-sign a loan for anyone. Even if you're not one making the payments on the loan, it still will hurt your debt to income ratio. Don't have any overdraft accounts, overdraft fees in your accounts. Don't spend any money that you need for the down payment. I feel like that kind of happens a lot. We just want to be really careful and make sure you know not to do that. So we're always available during the process to answer questions. So like I had somebody call me the other day and they were like, "Can I get an MRI done?" Well, yes, of course. Your doctor told you to get an MRI done. She's like, "Well, I know there's gonna be a copayment and I don't want to incur new debt." I'm like, "No, no, like please get all your medical things handled." That's fine, but I appreciate her asking. Like we always would rather be asked than somebody just assume because underwriting can be a little bit tricky and we want to make sure you have the smoothest experience possible. So contact us to help you get started on your journey. We want to help you achieve your dreams of homeownership. And it's okay if your path is going to be a little bit different or longer than somebody else's. We're going to walk you through that every step of the way. So I'll turn this back over to Lucretia and really appreciate the opportunity.
Thank you so much, Danielle. That was so much information. It was great.
Thank you.
So let me see here. Okay. Okay. All right. So you got pre-approved with Prost and you're ready to start your home search, right? Can everyone see my screen okay?
Yes, ma'am.
Okay, great. So before we start, I start unlocking doors and we're gonna, walk through. We're gonna make a wants versus needs list. I like to call this the negotiable and non-negotiable items that you might want in your home. Right. So some of the negotiables could be, having, washer and dryer in the basement. Maybe you want it on the first floor, but it really doesn't matter to you. The small things that, you can give and take on. Now, for the non-negotiables, you need to be very clear, very precise. If you are, that set on having a 3 bedroom, you can go up to 4, but you cannot go down to 2. That's completely fine. Another non-negotiable for individuals who have children, is the school district. You need to be in a specific school district. Maybe your kids already attend that. You don't want to switch them. That's completely fine. It could also be, how far you are from shopping, grocery stores, parks, different things like that. But I do ask my clients to make a list, what are the things that you can negotiate on, but also what are the things that you can't. And sometimes these are interchangeable. You might say, "Oh, I really need 3 bathrooms," but honestly, you can live with 2. But if you can't go down to 1, that's completely fine. I understand, if you have a big family, but understand that, you may not get every single thing that you have as far as non-negotiables. Just know what are the things that you will not budge on. This is going to be completely important because it never fails. We go over the things that you got to have, you absolutely you need, and then my clients send me a home and I'm like, well, this is missing, A, B, and C. Oh, well, we talked about it and we really don't need those things. That's completely fine with me. I'll show you the house. Just, understand that some things will change, your needs are going to change, and that's completely fine. But the things that you absolutely cannot negotiate on, be firm, understand. Let's not look at 2 bedroom homes if you absolutely need 3 bedrooms. No one wants to waste their time looking at a home and it is not what you want. So now we're going to go over some items that are in the purchase contract that are extremely important and that I explain to my clients. And the first thing is the earnest money. Earnest money is basically a good faith payment. It is money that is used that will go towards your closing cost, go towards the purchase of the home rather, and it is only paid when we have an accepted contract. A lot of people think that, you're going to pay earnest money for every single contract that you submit. This is not true. You only pay it after an accepted contract. Now, your closing costs, this is not necessarily inside of the purchase, the contract, but it is something that I want you to think about. Closing costs is usually determined by the lender. It is usually 1 to 2% of the purchase price. Danielle, you can, correct me if I'm wrong, but it is something that is paid by the buyer. Now, in, the perfect world, the perfect market, we could ask for the seller to pay a little bit towards the closing costs, but do keep in mind that this closing cost is the buyer's responsibility. Please don't think that you are entitled to closing costs by the seller. This is not the case. After having a conversation with Danielle and Ken, if you are in need of closing costs in order to purchase this home, this is communicated up front. I usually do call the lender and say, hey, do we need closing costs? Do we not? If we don't have to ask for it, if the buyer has the funds to pay for all of the closing costs, I would advise do not ask for it. The seller wants to pay as little as possible when it comes to selling their home because they want all the possible, net earnings to go inside their pocket. They don't want to give up anything else. And it is depending on the market. If it's a buyer's market and there's way a little bit of leeway and the seller is in desperate need to sell their home, they will pay for closing costs. Don't get me wrong. This is something that is done regularly, but please don't believe that the seller will agree to it. They can say no. So just keep that in mind. Property disclosures. When we go view a home, I send you the property disclosure via email. Sometimes I print it out for you to view. This property disclosure will have any of all defects that the seller knows of on the property. So if there's been a leak, if something happened to the roof, if there's been some type of damage or there's still something going on with the home, the seller is legally responsible to disclose that in this. Now, if the owner of the home maybe had passed away and a child or someone else who has never lived in a home is selling a home, then that gets a little tricky. They might not know what defects are present in the home. So this is why it is important to get a home inspection, to know exactly what you're getting yourself into. But the property disclosure will have, detailed information about that property. And lastly, buyer's responsibilities. The buyer is responsible with doing research as far as the neighborhood, if the home is next to a landfill, if it's next to, a sex offender, if it is next to railroad tracks. The buyer does have responsibilities to research the neighborhood, make sure this is in a neighborhood that they want to be in. If it is in the right school district, sometimes I have seen, one side of the street is one school district and you cross over to the other side and it's a completely different school district. And, you have the responsibility of doing your due diligence, doing the research, making sure this home property is in a favorable location. Because if you're under contract and you find out that, hey, this is not in the school district that I want, or there's a registered sex offender down the street, that is not just cause for you to terminate this contract. You're going to have to come a little bit better of a reason to terminate. That will not do. And the seller, you will lose your earnest money. You can be sued, and we don't want you to go through that. So just do your research and just, take the time, make sure this is the home that you want to make an offer on. And now we're going to go over the 3 contingencies inside the contract. The first one is the inspection contingency. So after you have your home inspection done, the home inspector will send me and you a report. And in that, you're going to go through and make and circle, underline every single thing that you want the seller to fix or repair or service. If for some reason there are huge issues as far as foundation, now I've had some things where, there was issues with the foundations. You can terminate this contract. With Ohio, there are certain stipulations where, you can't just terminate it for, small imperfections. So we have to be very, very strategic about what we will be terminating this contract for. But if there are, a number of things that you just say, what, this house, it has too many issues, we want to terminate, that is completely fine. There will be a inspection period. Usually it's 5 to 7 days for you to conduct this inspection and determine if you would want to move forward. The next contingency is an appraisal. So after your contract is accepted, the lender will usually order an appraisal. When the appraiser comes out, the lender usually knows the day. Sometimes they just pop up, do it, and it's kind of like, oh, it's done. But with this contingency, it says if the home is appraised for less than what the seller has listed it for, let's say it's it's on the market for 200,000, but it appraised for 180. This contingency says that you don't have to continue with this. Now the seller can come down on the price to 180. You can pay that gap out of your own pocket, but the mortgage company will not cover, if it doesn't appraise for 200,000, they will not cover that difference. They only cover what the home is valued at. And if the seller chooses not to reduce the price, you can terminate the contract for that. If you really love the home and you want to pay out of pocket, that's your choice as well. But this is what that contingency says. The home has to appraise for what the home is being sold at. And if it does not, then we're going to do some negotiating to reduce that price, or, whatever path that, the buyer chooses to make, we'll go that route. And finally, sorry, it's the financing contingency. Of course, you buying a home is contingent on if you can get financing. If for whatever reason the lender says that we can't get financing for this individual for whatever reason, the contract is terminated. Of course, you can't buy a home if you don't have a lender who's willing to lend you the money to purchase a home. Is that plain and simple? So so you have to be able to be financed. So now we're going to go to Christion House with H2H inspectors, and he is going to go over home inspections.
Thank you so much, Lucretia, for having me here today, inviting me to this. So super excited about it. So I'm Christion House with H2H Inspectors. I've been a home inspector since 2017. I'm licensed in the state of Kentucky, licensed in the state of Ohio. A home inspection is basically a non-invasive inspection of the home in its current condition. It's visual by nature, and there's no tearing down walls. Most times we're not moving furniture because if we break it, we bought it. So the home inspectors typically will avoid moving things during the home inspection if a home is occupied. And home inspectors, we cannot predict the future. We do the best we can to educate our clients on age of the systems, how things are performing, photographic proof of our findings by way of getting up on the roof, in the attic, in the crawl spaces, and testing all the major systems in the home as if it's fully occupied. the plumbing system, the electrical system, major appliances like your kitchen appliances typically stay with the home. We will test and activate those for one cycle to ensure everything is operating as it's supposed to be under normal operation cycles. So that's kind of a small picture as far as what a home inspection is. Um, the big reason to have a home inspection is education. You want to know what you're getting into for one of the biggest investments you're going to make in your life. You want to know any big ticket items that are coming up. You want to know if your furnace, one of the most expensive appliances in a property is your furnace. So you want to know if it's performing well. You want to know if it's 20 years old, because if it's 20 years old and it's still working fine, you got to be financially prepared for that. That's one of the important things to know, and one of the big reasons to have a home inspection. Also, a good reason to have a home inspection is if there are any major structural concerns with the property. That could be one of the most expensive things that are found during a home inspection is if there are any major structural issues with the foundation, with the main beams, with the posts, with the roof structure as well. Because from my many years of experience with home inspections and conducting thousands of inspections and owning rental properties myself and flipping houses myself, structural issues within a home is kind of like buying a boat. Bet on another $1,000. You'll never get exact prices on structural things with a home from my experience if those come up during your home inspection process. A home inspection is not mandatory for a lot of transactions. During the years of COVID, I did experience quite a few home inspections, or a lot of buyers that were foregoing the home inspection just to be much more competitive in the home buying market. So a home inspection is not mandatory, it is optional. And when you're shopping for a home inspector, you do want to do your due diligence. You want to trust your real estate agent. You do want to trust your team of hired professionals that you vetted, and you do want to make sure, one, your home inspector is licensed. Two, you want to make sure that your home inspector is well educated in the type of home that you're buying. Brand new construction, old construction, the likes, things of that nature. And should you be present for your home inspection? That is up to you. We have been working with a lot of out-of-state buyers coming from the coast, as far as California, Florida, Oregon, Washington, and oftentimes they cannot make the home inspection, which is perfectly fine. What you want to make sure is if you can't make the home inspection, you want to ensure your home inspector is also providing a lot of photographic proof of their issues that they've discovered. You want to ensure that the home inspector is putting the exact location of the issues. So then that way, when you get to see the property in person, then you know exactly where to go to. Or when you're hiring the handyman or the qualified professional to do the repairs, they know where to go to look for those issues. So as far as being present during the inspection, you don't always have to be there, but if you can be there, absolutely. If you don't want to make the whole inspection, at least make the last hour of the home inspection. And most home inspectors in our industry, as far as the services go, they'll give you a 30-minute, 45-minute, an hour notice before the end of the inspection. They'll go over all the findings with photographic proof, and then you'll get a copy of the report. And you do want to vet your inspectors and make sure they have good documented photographic evidence of any of the issues that are discovered during the home inspection process. You don't really want to get somebody who's going to go in with a checklist and check marks. You want photos. You really, really, really do. And with that, before you hire your home inspector, hopefully you've already got to see the property in person. If you've not, you've already been working on your list of items that are important for you. So when you're hiring your home inspector, have a list of items that are important to you. Ensure you get that list to the inspector that you hired, but then other key areas that you want to ensure the home inspector is paying attention to are the big ticket items. Structure is a big item. Roof system can be very expensive item to replace if you have an older roof system. In addition to the major appliances, how's the electrical system performing? What's the amperage rating? Are you able to get photographic proof of behind the panel and see the condition of the electrical systems? And is the furnace performing as it's supposed to be? Because again, furnaces are the most expensive appliance in the home, and most homes we work in, there's usually only one heating and cooling source in a home. So being budgeted for the knowledge of potential repairs, routine maintenance, or potential replacement if you have older systems. And as a home inspector, we can set those expectations for you very, very realistically in preparation to plan for the future. Um, some other key things to keep in mind when you're hiring a home inspection or a home inspector are additional services. So, do you want to know about the drainage system, the lateral drainage system in the ground? So, by and large, do you want a sewer scope? In addition to that, most popular additional service that's requested with us is radon testing. We do a lot of radon testing. Mold testing is an additional service as well. If you have allergies or things like that, or any susceptibility to a healthy home as far as air quality, you may want a mold test. And then always make sure you get a termite inspection too. I think that's a pretty standard requirement. That's mandatory, if I'm not mistaken, depending on the load, for a termite inspection as well. So as far as additional services outside of the home inspection, radon test, sewer scope, mold test. If you're buying an older home from the 1970s and older, may want to consider lead testing or asbestos testing if there's any suspected materials in the house as well. And this is just going into, the more you know, the better prepared you are when you're getting ready to buy a house. And I think that's all I had to offer, Lucretia. Did you have any questions or concerns on what I discussed?
No, I like the sewer scope, because I've had clients and other real estate agents, and they, a few months in, a good rain gets going, or they do a load of laundry and flush the toilet, there's like back up, and come to find out there's roots growing in the pipe. So
Yes,
that
ma'am.
is something that, um I think a lot of people didn't know that their home inspector could do. So that is really good information.
Yeah, and if a home inspector can't do it, typically, like, an average cost of that service, even if you hire an outside agency, hovers around $150 to $300, depending on the age of the house. So older homes, I would advise people buying older homes from the 1980s and older, where there's also going to be a probability of like cast iron, clay tile, Orangeburg, or galvanized pipes. That would be a very important thing to get done, because lateral drainage systems are, if there's any damages in there, that could be a conservative 5-figure fix to make those repairs. And even new construction, we've had houses less than 5 years old, unfortunately, where people or owners or the construction crews have driven heavy equipment in the yard and actually damaged drainage lines in the past. So even newer construction, we've had damaged pipes, we've had tools in those drainage lines that have gotten stuck, and animals and roots, and I've even had clay tile cracks and pieces of the Orangeburg drainage lines coming apart that we've discovered with our own sewer scope services that we provide.
Great. That's great information. Thank you so much. I don't think I have any questions for you. I don't know if you want to stay on to the end. Sharon is the last presenter. But if you have to leave, no worries. Thank you so much. And I do have your
Thank you, ma'am.
information on the very last slide of mine. And I will definitely make sure to refer you to any and all clients.
I'm grateful for the opportunity, ma'am. Thank you so much.
You're welcome. You're welcome. Okay, Sharon, are you ready? Oh, you have to unmute. Unmute, Sharon.
Okay, can you hear me now?
Yep.
Okay, awesome. And thank you so much for inviting me. I am Sharon Padilla. I'm with Choice Home Warranty, and I've been working in the home warranty field for almost 20 years. And today we're going to discuss the difference between a homeowner's insurance policy and a home warranty coverage. A home warranty, like home insurance, is a critical piece of protection for any homeowner. And when you're covered by a home warranty and insurance, then you have the most security possible and the best coverage any homeowner can ask for. Insurance like State Farm, Liberty Mutual, they're going to cover what might happen. Smoke, fire, freeze, theft, secondary damage, natural disasters, acts of God, hail, windstorms, tornadoes. That's what your homeowner's insurance is going to cover. And for many people, these things will never happen. But if they do happen, that's when you're going to be glad that you have homeowner's insurance. A home warranty is going to cover what will happen. The HVAC is going to stop working. The refrigerator is going to stop cooling. The toilets are going to overflow. It covers failed mechanical systems and appliances. A home warranty plan is a 1-year service agreement that protects your budget when covered appliances and home systems break down or malfunction under normal conditions of use. It helps you with the cost of the unexpected repairs of these major systems and appliances that break down due to normal wear and tear. A home warranty will always repair first. It's not emergency service, it's budget protection. Home warranties can range anywhere from 12 months of coverage, 13 months of coverage. Some even offer multiple years of coverage, 2, 3, and 5. And it will give a homeowner, the first-time homeowner, peace of mind. My most popular one that I have is the 2 and the 3 year, because my homeowners want to make sure that when they move into the house that they have coverage for the at least 3 years, because they know then that they're going to be protected, and they know that they got a great price on the home warranty because they did a multi-year policy. Instead of a deductible like homeowners insurance, which is going to be anywhere from $500 to $1,000, you're going to be charged a service fee or a trade call fee, like a copay when you go to the doctor. In most cases, the trade call fee or service fee is paid directly to the service technician, contractor, and sometimes it is paid directly to some of the warranty companies. They collect it up front, and it can range anywhere from $60 to $200. The home warranty company selected in the buying process will dictate the cost. Each home warranty is different in coverage and how much coverage they offer. So what that means is that a home warranty will have an aggregate. An aggregate is a limit or the maximum amount the home warranty will reimburse the policy holder for their covered claim. Some warranties have aggregate caps for the entire contract year. In practice, a home warranty works like this. Your refrigerator stops working, you make a claim. A licensed qualified service technician is dispatched to come out and evaluate the problem. Assuming the problem is because of normal wear and tear or another circumstance covered under the terms of your service agreement, the technician will either make the repair or the home warranty will buy you out or replace the appliance for only the cost of the service call. So, for example, Sears gets called out to your house. They're going to assess the situation. They're going to then tell the home warranty company what is going on and what has happened to the refrigerator. They are then going to put in a report that the motor has burned out and it needs to be replaced. The warranty company will then authorize it. The part will be ordered. The part will either be shipped to their house or the contractor's office, depending on what their agreement is with their supplier. And then the contractor will have to come back out and repair the refrigerator. Unfortunately, a lot of these parts now cannot be, you just can't go to the store and pick them up. They have to be ordered. A lot of this has happened since COVID, and the parts have to be ordered from the manufacturer or from a supply hut. And sometimes it can take 2 or 3 days to get these parts. If you're like me and it's my HVAC system, my part is on back order for 8 weeks because the train doesn't have the part. They're on back order, and I can't do anything about it because train has to supply the part to the contractor in order for them to come out and fix my air conditioner. So there's like a few different things that can happen in the home warranty world. But if you ever have any questions regarding that, you can always call me and I'll walk you through it and we can talk about what the process is. The best way to think about a home insurance plan versus a home warranty is that the two also work together. So you come home from work one night and you've got water everywhere in your townhouse because one of your pipes burst. Okay. You now are going to have two claims. You're going to have one with the home warranty company, and the home warranty company's responsibility is going to be to come out to your house to repair the broken part. But when the pipe flooded, it also ruins your kitchen floor, and your kitchen floor is now considered secondary damage, and that secondary damage is going to be covered by the State Farm men, farmers, or whoever you have your homeowners insurance with. They also will do the remediation to remove the water and anything that might have, sometimes you get mold from water. They'll have a remediation guy that will come up and take care of all of that. So the home warranty fixes the broken part. The home insurance is going to fix the secondary damage. So overall, what a home warranty is going to do for you is going to give you budget protection. And so you're covered with a home warranty, and that if that air conditioner goes out, that you can make a claim, and it's going to help you tremendously in having the home warranty cover the claim versus having to pay retail. Right now, an air conditioner is probably going to cost, just the air conditioner alone, the condenser, is going to be over $8,000 this summer, just for the air conditioner. If you have to have a complete system replacement, depending on the tonnage of it, it could go anywhere from $10,000 to $20,000. The cost of everything has gone up. So if you anticipate that you might have these expenses, you're looking at your home inspection report, and he's saying to budget in for a new water heater. He's saying budget in for a new air conditioner. It's working right now. Everything's working perfect, and there's nothing wrong with it, but it's aging, and he's telling you to budget. This is how you would anticipate expenses, is by having the home warranty, because you're going to have that home warranty to help you with some of those expenses. It adds added protection to your home. So you've got the home warranty that's going to fix the problem and repair the broken pipe, for example. And then you've got your homeowner's insurance that's going to take care of all your secondary damage. So they basically complement each other, and they work together so that when you have a breakdown, the warranty will cover it due to normal wear and tear. And then the home insurance is going to take care of something that broke down due to normal wear and tear. Items that are not normal wear and tear, and these are true stories. I've seen coat hangers in furnaces where the house was going through a divorce and somebody put a coat hanger down it. I just had an air conditioner that they were cleaning the blower motor, and they found a toupee, like a wig, inside the blower motor. I've also seen where they couldn't get the ice out of their ice maker, and they started using a pick and broke the complete ice maker. Those are not normal wear and tear, because things don't break down because of those reasons. An ice maker is going to break down because one of the gears broke. Air conditioner is going to break down because the sensor is done, the motor is done. But when you start putting extra things in there that are not normal wear and tear, those are not going to be covered items. When we have to replace a system, we are going to do the best we can to get the equipment there, and they're going to do everything that's in the warranty. So like there's modifications to bring old equipment together. But whenever you have to do a system replacement, always know that you will still have to budget for some non-covered costs, because the home warranty is not going to cover everything. There are going to always be some non-covered costs. Each warranty company covers everything different. So you want to read the terms and conditions of your warranty. You want to know how they're going to cover it. And then there's also the liability section that will tell you how it's going to be covered. I know I just replaced a heat pump. They got a complete system replacement, which included a heat pump and an air handler, and 100% complete system replacement. That if they had had to pay for it retail, it would have been almost $8,000, and my homeowner's non-covered costs were $662. They were cheering all the way to the bank that's all they were going to have to pay to get their whole system replaced. So just remember that the home warranty adds value and it adds savings. And if you ever have any questions about the home warranty, always reach out to your realtor, and they will make sure that if they do not know the answer, that they will ask their sales rep that question. And they will always make sure that they put you into a real estate warranty versus something that is just sold on the internet as a direct to consumer, that wouldn't have somebody like me that Lucretia can call and say, hey, I need to have something explained. I don't get this. Where if it's a home warranty that's sold online, they're going to have to call a call center and talk to someone that in a call center. They're not going to have a person like myself. So the home warranty protects your most valuable asset, which is going to be your new home. Either one of you guys have any questions?
Thank you so much, Sharon. I have a question. So one of the major things that happens, like I was talking to Christion about, and let's say someone buys a home and they don't get a sewer scope, but
Okay.
they have backup, like they have, problems with their piping. Now, I know you mentioned like, a pipe burst. What is the limitation with plumbing and piping?
Okay, so a sewer, there's two different things going on here, Lucretia. So when you look at a home warranty, you're going to look at roof down, walls in, and floor up. Okay, the sewer pipe is outside the main foundation of the house, and the only thing that's going to be covered on the warranty is if it is a stoppage. We're going to clear the stoppage out to 125 feet. But if that pipe is broken in the yard, that is going to be the homeowner's responsibility unless they have pipe coverage on their warranty or even on their home protection plan, or like their State Farm plan.
Okay. So there's limitations, yes.
There's going to be limitations, and everybody is changing. So stay tuned for August 1st because there might be some pleasant surprises coming.
Oh, okay. You said pleasant, so.
I just know, just to interject, we had a home warranty when we bought our house, and we used it twice. And it covered, we still had some out of pocket costs because, you're talking about replacing a 20-year-old water heater with the new one, but the home warranty was great, but it was really helpful to have a rep. It's really, in this day and age, when I was a kid, but with everything being so much on the internet, like, well, I can find a lender on the internet. I can schedule my own showings through Zillow. I can buy my own warranty. You lose any sort of personal connection. And so when you need something, when you need extra, like we weren't getting anybody to call us back from our home warranty company. It's like, well, I got the rep involved and answer right away. And it wasn't, we were probably going through, maybe we were doing something wrong. It's not like we've ever used it before. And really having a resource, whether it's a realtor, a home warranty person, a lender, home inspector, having a relationship with somebody makes the difference between when you have an issue, making it feel like it's the end of the world to being like, I can solve this because I got my people.
Right.
This is really important.
It is really important too that the home inspection actually works with the home warranty too, because if something should happen and let's say a claim is put in and we have to go back to the home inspection to see if it was in good working condition at the start of the warranty, that is the only thing I can utilize to maybe possibly overturn a claim. So, but if the home inspection says that the water heater is leaking and it's got noticeable rings around it that it is leaking, that will not be covered on the home warranty because it's got water leaking out of it already and it is not in good working condition.
Right. And, and that's why, going back to why you should work with a real estate agent, because if I see anything leaking, breaking, cracked, immediately that's going to go back into the what's called a defect notice. Like, we're going to ask for this to be repaired. If it's really bad, replaced, and we need receipts. So we need evidence that this was done. So if, in another year, if this comes up again, well, we have receipts that it was, it was repaired or replaced. So we can use that in your, home warranty claim. So it's really important to have a good team. And that's why I really love this team. Like, we all work together. It's not like, the buyer is going to be completely in the dark. They're not going to know what's going on. We communicate with each other. I communicate with everyone. I
Right.
communicate with if, and some of the home warranty companies, it's really hard to get in touch with a rep. But I've always had my agents come back to me. Oh my God, this happened. I don't have my home warranty information. Don't worry, I have it for you. So it's like, you know what I mean? It's really important to really have an agent who, and we are I say we are the resource hub. you know you meet us and we will connect you to every person, every company that you will need in buying a home.
So, Lucretia, when you are looking at the home inspection, are you also asking for them to clean and service the air conditioner and furnace? Do you ever
i
ask for that?
I do.
Okay.
If and a lot of inspections will say, if it says there was dirt, debris, and ending it's nearing the end of its life, functional life. I know, like a furnace, okay, sellers are not going to replace a furnace, but I will ask, it needs to be serviced. Absolutely. It needs to be cleaned, and I need a receipt.
Right, because the like especially on the furnace, the blower motor has these little fins on it. They're so little that air passes through them. And when that blower motor gets dirty,
Hmm.
that's what strangles the furnace and makes it stop working because it can't breathe anymore. And so if you are getting the system completely cleaned, including the blower motor, and they give you a receipt, always keep that on hand and always have it, because if it was listed on the home warrant or the home inspection report that they recommended it be cleaned and serviced, they could possibly ask for that receipt of repair and just what you. And then if they do a multiple unit or year warranty, then the first year they have lack of maintenance on the warranty, but the second, third, fourth year that every year they renew it, the lack of maintenance will go away. And that's when you need to go back to the manufacturer's requirements. And the manufacturer states that the air conditioner and furnace should be cleaned and serviced once a year. And that's how you extend the life of your equipment. And I have a lot of people that move in, and the first thing that the buyer will do is that they will call someone to come out and do a deep cleaning of the systems for them so that they know exactly what they're working with from the very beginning, and they know that their system's been cleaned.
That's good. Every year. I'm guilty of not doing that. I will admit it. But it's like, because I think in Ohio, the weather is so unpredictable, right? It's like, okay, well, we had the heat on last week, but then I turned the AC on. So it's so unpredictable. And with switching the units back and forth like that, I know it can cause a lot of wear and tear. So getting it serviced every year is a good idea. And it will save you so much money in the end. I have a friend, and I screamed at her, and she had just moved into a new house, and the seller paid for the first year, and she dropped the warranty, and then she said, oh, our water, no, it was her furnace. Something happened to her furnace. And I'm like, I could strangle you right now. I could strangle you. But guess what? Now she has to pay I don't know how much to get that fixed.
Right. And
So
if they didn't get a warranty at the close of escrow, some of the warranty companies like us, we will let them go month to month.
Yeah,
So
and I told her that. I told her,
Mhm.
after when the seller pays for a year, after that, you can pay month to month. But she was like, well, I don't know, and I don't really think I don't know what excuse she made, but it wasn't worth it. So it's like now you have to, grit down, bear that cost, and hopefully get another. Like you can get homeowners and a warranty now, but it won't cover that, and then you have to waiting period, I believe. So you have a house and things break,
Mhm.
so just to cover your pockets and your costs, just get the home warranty.
Right.
You know what I
Because
mean?
it will happen.
Yeah.
Your car insurance, your homeowner's insurance, your medical insurance, those are going to cover things that might happen. It might happen, it might not, and you're covered. But when you come to your home, it is going to happen. It will happen. It will break down.
Yeah, absolutely. Well, thank you so much, Sharon. Thank you, Danielle. Thank you, Christian. I appreciate you guys taking the time to come on and give your expertise in your area. I will definitely, I'm going to share my screen and give the last little bit of the slide here. And Sharon. So thank all of those who tuned in, who took the time out of their day to watch this video, the playback. If you're watching the playback, this is the contact information from everyone who spoke today. If you have any questions, concerns, please let us know. We are here for you. We are here to get you in a home. And, there's so much information that you have to think about, but we're here. We will be available to you, for you, to answer any and all questions regarding real estate. So thank you so much. I appreciate your time, and have a great afternoon, evening, whenever you're watching this. And thank you to the presenters who came on. I appreciate you. And I look forward to sending people your way.
Thank you so much
you.
for the opportunity.
Thank you,
You are
Lucretia.
welcome. You're welcome. And you guys have a great rest of your afternoon.
You as
Thank
well.
you.
Thank you.
Mhm.
Bye bye.
Bye bye.